And welcome back to the Financially Simple Podcast. I'm your host, Justin Goodbread, and today we're going to continue our deep dive into risk management as part of our discussion in personal finances for us business owners. As you recall, risk management deals with insurance and legal matters. Today I want to just talk about a topic that I got to be honest with you. Early in my career as a financial planner, I didn't see a lot of merit in this particular topic. But now as I've lived, I see all the more reason for this. So today's topic is, what is disability insurance and why does it matter? Like I mentioned, in my early career, I entered the field at roughly about age 23. Young and full of vigor, I could charge hell with a water pistol. There wasn't a mountain I couldn't climb. My health was outstanding. I just finished my landscaping career, and let me tell you, after throwing pallets of sod, trying to sod a yard, you wouldn't believe how healthy you can be. I mean, I was built like a brick house. Now, I'm not too tiny today. I'm a little chubby today, if you really want to know. Probably I need to get back out and throw some more sod. But I didn't see the need for disability. I thought I'd live forever. Over 4th of July weekend here that just passed, as I'm recording this in 2019, my kids and I spent time on the tube pulled behind the boat on the Tennessee River. We live right on the Tennessee River. We have several acres, it's about 80 to 90 acres there on the river. And we took the boat out, spent time bouncing around on the tube. Now, I don't know if you've ever ridden a tube, but the older you get, the more painful it is, especially when you and your children are playing King of the Tube and you're throwing your children off holistically, and you fall off and hit the water in many different directions. You land on your head. You get your sinus cavities cleaned out. You land on your back. You land on your butt. You land on your feet. You land on your belly. You land any other way other than the right way, if there is a right way to land in the water, driving 25, 30 miles an hour. Needless to say, after 3 days of this, I was sore, people. My back hurt, my butt hurt, my face hurt, my leg. There wasn't a part of my body that didn't hurt. I got up to go work out the Monday after 4th of July weekend, and I got to tell you, I couldn't hardly move. And in that moment, I thought about the fact that I've got to deal with disability on this episode, or this series of episodes, and talk about the importance of it. Recently, I had a young client, a business owner in our office. She is a single mother, successful business owner, very savvy, unbelievably savvy, but a single mother, 2 small children. She didn't have disability insurance, and I told her, I said, you need some disability insurance. She goes, I don't want to get it. I don't think I ever need it. And I said, okay, that's fine. But if you don't buy disability insurance, I'm going to send you an email, and I'm going to tell you in writing that I strongly advise you get disability insurance. That way, when the day comes that you become disabled and you have no money to provide for your children, your 2 boys' future, or your ability to care for yourself, that you can't sue me. Because you can't say, Justin never told me to do this. And when I told that, she looked at me sternly and she said, well, do you think it's even possible? I want to deal with those questions today. First, before we get to that, do you think it's possible for someone to get disabled? Let's deal with what is disability to begin with. According to the ADA, the American Disability Act, it defines a person with disabilities as, and I quote, a person who has a physical or mental impairment that substantially limits one or more major life activities. If you think about that quote, with a physical, some would argue that after I got off the tube, I couldn't handle one or more life major activities, or a mental. Now, some would argue that, Justin, you have mental impairments. But if you think about how many people you know that could fit that physical or mental impairment, that they can't even handle one or more of life's major activities. My father and my father-in-law. So both men on my dad and my wife's dad were both disabled before the age of 58. Both of them were. It's pretty amazing to me when you think about the number of people, when you stop and pause, that are dealing with a disability. Some interesting stats about disability that I told this young female business owner, that I found in a publication about the Rehabilitation Research and Training Center, and the study was Disability Statistics and Demographics. Here's some stats, which it reads. The first one, per the U.S. Social Security Administration, by the way, try to say Social Security fast 12 times. You can't do it. Per the U.S. Social Security Administration, around 1 in 4 20-year-olds will become disabled before they retire. 25% of those who will make it to the age of 20 will be disabled before they hit retirement age. My father and my father-in-law both fit in this category. That's pretty amazing to me that you have a 25% chance, if you live to be 20 years old, that you'll be disabled before you retire. That's pretty amazing to me. The American Community Survey, or the ACS, you'll see that a lot in the disability world, estimates that overall rate of people with disabilities in the U.S. population is 12.8%. So if there's just over 300 million people, 30 million plus people are disabled. That's a ton of people who are suffering with a mental or a physical ailment that is limiting their abilities in life. The percent of people, according to the survey, the percent of people with disabilities varies greatly by state, as do the people with disabilities in employment, poverty, earnings, and health behaviors. Well, what does that mean? It means that it doesn't matter where you live, how much money you make, what you do, what your behaviors are, whether you eat good or diet good. It doesn't matter. Disability affects us all. In the United States, in 2010, there was an 11.9% disability population rate. In 2016, there was a 12.8% disability population rate. Currently, Utah, I was actually just talking with an advisor in Utah. Utah has the lowest disability rate at 9.9%, and West Virginia has more than twice that percentage at 20.1%. It's amazing to me. In 2016, 38.9% of people over the age of 18 that were on disability were obese. Were overweight. In comparison, only 26% of those without disability were obese. So those who were obese, who were on disability became obese because they couldn't move, they couldn't participate. And when obesity brings all sorts of other major medical problems. A sidebar here, something interesting I saw recently is a friend of mine, actually a client of mine, showed me a photo that was in their family's photo library of New York City in the late 1800s. And they were showing me the people. And the people were tall, at least tall to me. I'm short. So they were tall and they were very slender. And I'm not very slender. I'm built like a tree stump. In fact, when I used to wrestle with friends, they would say, "Man, you're like wrestling a tree stump." I'm not tall and I'm not slender. Man, I looked at those folks. I'm like, man, look how tall, look how slender these people are. And now if you took a picture of New York City, it's quite the opposite. Well, they may be tall people, but they're typically not as slender. So we have an obesity problem, but if you become disabled, you're more likely to become obese, which leads to even more major health issues. In 2016, the median earnings, the average earnings of people with disabilities 16 years old and older was $22,000. Those who didn't have disabilities was $32,000. So there's a 30% decrease in earnings just because of disability. If you listen to those statistics, it's pretty apparent why disability is one of those risks that you have to deal with. You can set out the best logical financial plan. You can set out the best logical personal plan. You can set out the best business plan. And you could be halfway onto your destination and then all of a sudden life happens. My father-in-law was at work. He worked as a phone linesman where the phone cables went from telephone pole to telephone pole. One day he was about 35, 40 foot up in a telephone pole and his gear broke. And here he was working, doing nothing wrong, no accident. The gear just broke. And he fell to the concrete, landing square on his back, causing him to immediately become disabled before the age of 50. My dad was at work, doing nothing wrong. A car rear-ended him as he was working, pulling some things. And here he was now before the age of 58, disabled. Friends, it doesn't matter who you are, what you do, what occupation you're in, what health behaviors you have, life can happen. And statistically, you have a 25% chance of life happening. Your greatest asset is not your income. It's not your financial statements. It is not your net worth. It's not the real estate. It's not your business. It's your ability to produce income. That is your greatest asset. And when you lose that ability to produce income, you have to have a safety net to protect you. Unless you're independently wealthy, of course, and even if you're independently wealthy, you probably still want a safety net. I was noticing that in very many of these, what's the word I want to use? These adventure type systems, there's often a safety net. I was watching the circus as a kid, and you saw the trapeze artists flying through the air. And though they did the routine hundreds, if not thousands of times, they still had a safety net underneath them just in case they didn't pull the routine off just right. You have to have the same in your family. So let's deal with the types of disability insurance for your personal family. In this particular episode, we're going to cover 2, and in the next episode, we're going to cover 1. So the 2 types of disability insurance that you need to be aware of is one that's called short-term disability insurance and one that's called long-term disability insurance. So let's tear these onions back slowly. Short-term disability insurance often covers your income for a period of 3 to 6 months. Most of the time, it comes through your employer at work. So if you're a business owner, more than likely you've heard of companies like Aflac or companies like Colonial Life. And those are just 2 that have come readily to my mind. There's many that offer work-based insurances for your employees to enroll in that offer short-term disability insurance. It's typically very, very, very inexpensive. In the past, I have had short-term disability insurance. Let me tell you why. Let me tell you why I don't have it now. In the past, whenever I went through a crazy lawsuit, my resources, my funds dried up because I was paying all these stupid attorney bills. No, I'm not saying the attorneys were stupid. They're actually some great people, good friends of mine. They were doing their job. But I had to pay their bills. And let me tell you, attorneys are not cheap. Especially if we're dealing with a lawsuit. It gets expensive really quick. And we burn through our cash. We burn through all of our savings just trying to deal with this particular situation. So here I am as a father, as a husband of a wife who stayed at home raising our family, as a father of 3 small children, and I didn't have enough money in the bank to do anything more than basically pay my bills. If something had happened to me, I needed some coverage that would take care of those who required me, those who relied on me. So I purchased a short-term disability insurance. I purchased it through a group-style plan with one of the previous companies that I aforementioned, and it provided me a monthly benefit that would help me pay my bills for 3 to 6 months. Now, after the lawsuit was settled and dealt with, I rapidly regained my asset position, and I no longer needed that short-term disability insurance because I now had enough cash, and I do have enough cash, to weather the storm for 3 to 6 months should something happen catastrophic. So short-term disability insurance is there if you do not have an emergency fund. That's the simplest way I can put it. And if you don't have an emergency fund, you really ought to look against some short-term disability insurance because just like the trapeze artist, you do need a net underneath you because you never know. You could be at work doing nothing wrong and an accident happened. You could be at home. My wife got out of bed one time, just actually stepped wrong, and she was down on her back for a while. You've heard these freak accidents that happen. You need some disability insurance. If you don't have an emergency fund, get short-term. The opposite of short-term is long-term disability, often referred to as LTD. If you look on the websites, you'll see LTD. LTD, or long-term disability insurance, basically covers you for a long period of time, which is why it's called long-term. Think years. So here I am, 40 years old. I get off the tube, or let's say I land on the tube wrong and I now break my back. Heaven forbid, but let's say I landed on a stump in the river and I break my back and I can no longer work. Well, I can talk, so probably I can still work, but let's say I can no longer work. Long-term disability insurance would provide a benefit to me for a long period of time. The length is typically age 67, so mine covers me to age 67. But the idea being is it provides you enough coverage to get you until you have other income in place. So long-term disability insurance comes in 2 flavors. Think about chocolate and vanilla here. Or think about pepperoni and sausage. Pizza's a better analogy if you really want to know the truth. Own occupation, for those of you who don't understand my southern dialect, is own, O-W-N, or on, however you want to say that, occupation. So people call it ONOC for short. Own occupation disability insurance covers your specific work task, your specific task. The easiest example I can give you is that of a dentist. You know, a dentist, they use their hands to hold those tiny tools to get into your mouth and deal with cleaning and fixing and doing things within a very small area. And if their hands are not steady, then they cannot perform their duties. So an own occupation policy, if a dentist had that and they were to, quote, hurt their hand, where they could not do the duties of fixing teeth, it would begin paying a benefit. Now, surely they could go and teach at the dental school. They may be able to do audible books and write. They might not just be able to hold their hands still enough to hold the utensils that they would need to, or the tools they would need to do work. So own occupation covers your own occupation, which is why it's called own occ. And it allows you to go work anywhere else and still receive a benefit. That own occupation coverage is not typically available for all professions. For example, I'm a certified financial planner. I have multiple credentials. I deal with business owners, as you well know. I consult with business owners with my mouth, as you can hear on the podcast, or as you can see on the video. I use my mouth and I use my head. If something happened to my hand, I can still work. But I need disability insurance too. So what coverage I use is what's called any occupation disability. Basically, it means if I cannot work, it pays. So think about it. If I could no longer speak, use my tongue, let's say I were, heaven forbid, develop a tongue cancer and they had to remove my tongue, or a throat cancer, and I could no longer speak, that would hurt my income. But could I write still? Possibly. Could I make a living writing? Possibly. So an own occupation is, think of a catastrophic style coverage. I met with a gentleman this morning. I met an individual this morning at the swimming pool at the workout facility. They have an assisted chair that allows people to get in and out of the pool with assistance. It raises, you sit in it, and lowers you down in the swimming pool. When you get in swimming, you crawl back in it or slide back into it, and it picks you back out of the pool. And I know this individual, I believe he had like a cerebral palsy just based on the way his body was featured. I noticed he had a smile, and it was a, and I don't think it'd be weird, it was a gorgeous smile. He was happy. And anytime I see someone happy, it makes me happy. You know how a smile can be contagious. And I was walking by and I said, man, your smile just made my day. Thank you for smiling. And he said, you know what I was thinking about? I was thinking about this song. And he pulled his earplugs out and he played the music, and it was Wilson Pickett singing Land of a Thousand Dances. And Wilson Pickett is one of my favorite musicians of all times. I was sad to hear, I think he passed away last year in 2018, but I love Wilson Pickett. I love his voice. I love his just charisma. I love his music. And he was playing Land of a Thousand Dances, and I started laughing with him. I said, yeah, the mashed potato, man. And he started smiling. We just kind of joked and everything. That individual, come to find out, he was disabled. He's disabled. He cannot work. And so he would be somebody who any occupation disability would cover. My dad and my father-in-law, who could not work due to just amazing back injuries and injuries on their body, just to chronic pain. They couldn't carry a job. They were dealing with things. My dad, who's since passed, he couldn't. You watched his body. The man was in constant pain. He would sit there just in agony, just doped up with medication. Any occupation disability covered. So let me boil it down to this for this particular episode. What type of disability policy do you need? Here we go. You need a long-term disability policy that covers approximately 60% of your total income. So if you make $100,000 a year, for simple math, you need something that's going to give you $5,000 a month in benefit, or 60% of your income. The reason why you get 60%, or 65 is typically the max, is because Social Security, there's that SS word again, Social Security will cover 35 or 40% of your income. Therefore, you're made whole, which is the idea behind insurance. Insurance is to make you whole, not to reap a windfall. So you want to get 60% of your total gross income, or your take-home pay, covered. You want a 90-day elimination period. Sure, you can get a shorter, but you don't need it if you have an emergency fund. So you want a 90-day elimination period. You want, if you can get it, own occupation coverage. Remember, I can't get it, but maybe you can. You want what's called non-cancelable and guaranteed renewable. That's a rider that goes on. Basically, it makes sure that your premiums don't change and that your policy can't be canceled on you for any reason. It also, you want to make sure you have enough coverage to get you to age 67. 67, that's when Social Security is fully insured. Don't wait, don't get it to 60, get it to 67. Now, some policies now are offering age 70. I heard that the other day. Haven't confirmed that, but I heard somebody say that. So if you can get it to 70, get it to 70. You want to make sure you have a residual disability rider, which means that, let's say that I were to get injured and my throat was to be gone, I couldn't speak into this microphone or to clients. then let's say that I could write and generate 10 hours a week. Well, then it would cover the loss of income from the other 30 hours or 40 hours a week that I wouldn't work. By the way, I work like 60 to 80 hours a week. I'm recording this at like 8 o'clock at night. So you want to have a residual disability coverage. Basically, it covers your benefits when you can work sometime but not all the time. You want to make sure you have inflationary options on that so your benefit will proportionally increase as does inflation. If you're making $4,000 a month or $5,000 a month in your disability benefits at age 40, at 67, $4,000 or $5,000 a month is not going to pay the bills, folks. It's got to increase with inflation. And most importantly, you want to pay for this disability policy out of your home budget, not out of your business budget. Well, why, Justin? Well, when you pay for disability insurance out of your home budget, you're using typically after-tax dollars. That's the idea. So if you're paying for the coverage with after-tax dollars, the benefit will come to you tax-free in the event that you become disabled. Now, if you pay for it with pre-tax dollars, in other words, you pay for it out of your business and you deduct the premiums and you become disabled, then the benefit is going to be taxable to you. And you do not want taxes on a disability, not for a small benefit. Disability insurance is not cheap. It's not. Mine's like $350 a month. I've seen, by the way, I bumped the mic there. Women are more expensive in disability insurance than men are because of birthing abilities. Women are cheaper in life insurance. Men are, I guess, crazy. We end up being stupid and die. But men typically have a little bit cheaper disability premium, and women typically have a little bit more expensive premium. So that's enough about disability for you on the home front. Next time, we're going to talk about another disability, and this one you want to pay for out of the business. So we're going to talk about that next episode. Hey, friends, I say it every week. Life is hard. Life is good, and life can be frustrating. Money doesn't have to be. Let's continue to make our lives at least financially simple. Hey, y'all go out and make it a great day.